everybody, so in this video I want to quickly go over Apple earnings. So right now Apple earnings just came out. They usually come out 30 minutes after the bell. So right now we're up slightly in the after hours, but let's go ahead and actually look at the earnings. So to get here we want to go to the Apple Investor Relations page, and we're just going to scroll down a little bit, and you can see right here in the newsroom we get Apple results for Q2. So we go ahead, we click on read more. Now they basically have this intro right here. This is going to tell us the key information. So we want to read this real quick. So it says right here, the company posted quarterly revenue of $94.8 billion, down 3% year over year. That is a key metric to note. So instead of revenue growth, we are getting revenue decline. And that's especially not good because the PE multiples right now on Apple are pretty stupid high. So if we're looking at quarterly earnings per diluted share, it's $1.52, which is unchanged year over year. So you start thinking, okay, well, how is it unchanged? Well, that's because they are repurchasing shares. So they're essentially manipulating this number, because if you think about what earnings per share is, it's essentially net income divided by shares outstanding. So if you are repurchasing the shares, you're reducing the shares outstanding, which is increasing the diluted earnings per share. So that's essentially how that works out. So if we just go down and we read into these details right here, let's just scroll down a little bit. Let's see, right here it says, given our confidence in Apple's futures and the value we see in our stock, our board has authorized an additional $90 billion for share repurchases. Now, some people, they might go crazy over this, but this isn't really all that big news, because this is just authorizing $90 billion. It doesn't necessarily mean that they have to purchase $90 billion worth. They could purchase whatever amount that they want to purchase. But generally, when it comes to Apple, these last few years, they have been repurchasing about $20 billion or so. Last quarter, they actually repurchased $19 billion. So just some interesting things to note. Now, next, we could go ahead, we could click into the consolidated financial statements. Now, I have that right here. So we're going to go ahead and take a look at this. So right now, we are looking at the income statement right here. And, they break down their sales into these two categories, products and services. So we're looking at April 21st, 2023. Let me go ahead and zoom in a little bit. So right here, we're looking right here. We are comparing this to this right here. So we're comparing this to this number right here, because this is essentially last year. So when we're doing these comparisons, that is called a year over year comparison on the quarter. So if we're looking at products, products actually went down. So right here we have about 74 billion versus 77.5 billion. But take a look at services. Services actually went up a little bit. So here we have about 20.1 billion. Prior year we had about 19.8 billion. Now overall total net sales, this is 94.8 billion versus 97.27 billion. So as we saw in the front page, Apple is down year over year 3% on revenue. And that's not necessarily all that great. So let's scroll down a little bit more. And we could take a look at their earnings per share, which we see is $1.52. It's the exact same as last year. If we're looking at net income is down by about $1 billion. So, obviously it's not all that great, because you want to see growth in the stock, but, they're not really growing their earnings and they're not really growing their revenue here. So you have to start wondering, okay, well, why is the multiple so high? So if we want to calculate the multiple, let's just go ahead and look at the share price. It's at 165.79 at close. And if we're looking at the trailing 12 months, it's $12.89 on the trailing 12 months earnings per share. So what we do is we basically pull up the calculator. So calc. Now let's go ahead. Let's do 165.79. We are going to divide that by the trailing 12 months earnings per share of $5.89. So divide that by $5.89. We are essentially paying 28 times earnings per share. So, or price to earnings, I mean. So we are paying 28 times price to earnings for a stock that usually trades around, I would say, around like 15 to 20. So this is definitely a little bit overpriced right now. And especially seeing that we didn't really get revenue growth, we got revenue decline. So this is definitely a little bit worrisome. Now let's go ahead, let's go back into the earnings. Now there's one other thing that we could take a look at. So if we just scroll down a little bit, we can figure out what the actual share repurchases was. So we just got to go over to the consolidated statement of cash flows, and we're going to scroll down a little bit. We're going to look at this. Financing activities. So if we look at the financing activities, we're looking at repurchase of common stock right here. So right here it says 39.069 billion, but pay attention that this is 6 months ended. So what we do know about Apple is based on their last quarter, which I could go ahead and pull up right here. Their last quarter was $19 billion on their common stock repurchase. So all we have to do is we got to go back over to this quarter's data, and we subtract 19 billion from this. So how much did they spend on repurchases? 20 billion. So as of right now, they're not really slowing down on share repurchases. It still looks like they're spending around $20 billion or so. So not much to worry on that front. But like I did say, their revenue is decreasing year over year. So this is a little bit worrisome given where their price to earnings is. So I hope you guys enjoyed this video and have a good one.